So America's retirement plan is the 401k, and there is a reason for this. In this video today, I'm going to talk about 401ks, qualified plans, really tax-deferred retirement plans that, they want us to think, okay, we get the deduction today and we'll pay taxes in the future with the idea that we're going to be paying taxes at a lower rate. I don't believe in that. I believe taxes are actually going to be higher in the future, especially on distributions from retirement accounts. I'm not going to go into the ideas or the things that made me think that in this video. I'm just going to talk about the facts of the current 401k qualified plans, etc. Okay? So you have to understand, the government prefers if you postpone the taxes with these plans. Because when you defer, they're going to assume that, and they think that you can probably grow that money better than they can. So hopefully you do grow the money. And the longer you wait, the more money that the government will actually collect. So you're deferring taxes into the future. That money is probably going to grow, and then you're going to pay taxes on a larger nest egg. Okay, this is the harvest instead of paying taxes on the seed. Now, you're also deferring the tax calculation, and this is what I was alluding to at the beginning of the video, because we don't know where taxes are going to be at the future. But if we look at government spending, if we look at unfunded liabilities like Medicare, Social Security, and everything else that the government promises, all of the signs lead to one thing, and that's that taxes are going to increase in the future. So you defer taxes, and you're deferring it from paying tax on the seed to the harvest, and then you are also deferring the tax calculation. So let's look at some numbers with how this actually works. Now, if you were to pay taxes today on this seed of $100,000, for this example, by the way, I'm just assuming that you're going to have $100,000 in your 401k and you're not making any other contributions, and it's going to grow for 30 years at 7%. I'm not going to show putting $100 in, or $500 in, or $1,000 in every single month. That would obviously make these numbers much bigger. So we're just explaining the concept here and what some quick numbers look like. $100,000. If you were to pay taxes on that seed today, 20%, 20 grand. That's the all-in tax. 30%, 30 grand. 40%, 40 grand. Pretty straightforward. Fast forward 30 years, and now we have grown it. Let's call it an average of 7%. Okay, the harvest, it's going to be $761,225. So you have over $700,000. Now your all-in tax over your lifetime is going to be about $152,245. So we have more than 5x to what this is going to be. That would be closer to about 7.5 times more taxes. If you adjust this number for inflation, it's about 3 times more taxes. Now at 30%, that's going to be $228,367. So almost $250,000. And then at 40%, it's going to be over $300,000, which is your all-in tax. So that's really why they are okay and they want you to postpone taxes, is because they can collect more tax revenue if they allow you to grow that money over the next 20, 30 years. And this is why it might be wise for you to look at other vehicles, like maybe a Roth or maybe a cash value life insurance policy. Maybe you're going to look at real estate. The point is, when you lock money up in these qualified accounts that are tax deferred, what you're doing is 2 things. Number one, you're postponing the taxation, and it's going to get taxed on the harvest instead of the seed. And number 2, which I think is actually more dangerous, is that you're postponing the tax calculation, because no one knows where taxes are going to be in the future. Now, we've all been told, oh, you're going to retire into a lower tax bracket. Well, if you look at IRS statistics, the majority of people actually don't retire into a lower tax bracket. And personally, what I believe is that is just, you don't want to retire into a lower tax bracket. You do that if you have to. You retire on less income if you have to. The goal is to retire on more income, because when you retire, every day is basically a Saturday or a Sunday. So that's some quick things that I just wanted to talk about with 401ks, qualified plans. You're really doing those 2 things. Again, you're deferring the taxes and you're deferring the tax calculation. Hope you found this helpful, and I'll talk to you soon.